Good afternoon, everybody. Welcome to today's midweek update. So, we're going to talk about NVIDIA. NVIDIA just blasted off 10%. It's up on the day. AMD is not far behind. SOX is not far behind either. We're going to talk about all those. But before we get into that, I want to let you know that the market environment right now has been a chop fest. So if you've been feeling like your head has been in a blender, you are not alone. Now we're going to talk about how to get your head out of the blender and some of the keys to do that. So let me see where you guys are logging in from. Type into the chat. Let us know where you're logging in from. Leave a comment. If you are watching us live from X, I see a bunch of people watching us over on X. Drop a comment. Drop a comment over if you're on YouTube. Let us know where you're watching from. We've got YouTube, X, Facebook, Twitch, LinkedIn. People logging in from all over the place. So go ahead, drop a comment. Let us know where you are logging in from. All right, let's hop on over to the charts and get started here. All right, so here is NVIDIA. Here's NVIDIA. NVIDIA is up 11%, almost 11%. It was up 11% a moment ago, but it's up 10.7% as of right now. On the day, here's another one. AMD up almost, was up, whoa, was up quite a bit earlier, and now it's up only about 6%. Let's take a look at SOX. And SOX, this is the ETF that tracks the semiconductors. This one is only up about 5%. So what does all this mean? Why even bring this up? The reason why I bring this up to you here is because it's one of these traps. One of these traps that a lot of people get stuck in. You see moves like this. You see moves like this in SPY or in QQQ, and a lot of people see a move like this. This right here, QQQ is up over 2.5%. A lot of people will see moves like this and get very triggered. They'll start feeling all sorts of FOMO and say, "Oh man, I'm missing out. I should have bought in yesterday. Let me try to hop into this right now." And that's the wrong way to go about doing things. If you The way to make money trading is through focus. They say that trading it is boring, right? If you're doing trading well, they say that it's boring. I've heard that a million times, and I used to think that how could trading be boring? I love this game; it's so much fun. But if you're trading well, if you're trading the right way, then trading does become boring. And here's the reason why: you're trading the same types of things all the time. You are consistent. It's one of the reasons why I always felt that bowling was boring. It's one of the reasons why I always thought that golf was boring. Why? Why? And to the bowling fans out there, to the golf fans out there, I'm sorry. But I used to think that those things were boring. Why? Because the way to win is to do the same exact thing over and over and over again. If you were to go bowling and you roll the ball in the same way to get a strike and you're able to do that for all 10 frames, guess what? You got a perfect score. The trading is very similar in that regard. With trading, if you're going for the same types of setups, and looking for the same kinds of things and making sure that you're trading during specific market environments where the stars are aligned for you, then trading is going to be consistent, but it's also going to be a little boring because you're doing the same things over and over and over again. And one of the reasons why people struggle so much with trading is because they're looking at it as a form of entertainment. If if you're falling into that, you could be entertained by the market, you can make money with the market, but it's really hard to do both and to do both well. So you need to figure out, well, what is it? Well, what's your primary thing? And how much do you want your primary thing to be the primary thing? Oh, well, I really want to make money trading, but I still want to have some fun with it. Well, guess what? You're going to end up making a little bit less money because you're looking for that entertainment. You can't serve two masters. I'm trying to make money trading. That's my objective. Earlier today, I had a couple of stocks on the radar. Both of them triggered an alert. I took neither of them. Why? Why? Because trading is a business. I I'm looking to make money with trading. I had the two trades that I had on for today. You guys that are in the research program and you guys that are in the group coaching program, you guys know which ones they are. I had alerts set for CRBP and BURL. I took neither of them. The reason why is because they didn't behave in the right way, right? Both of these are quality setups. BURL setting up in a volatility contraction pattern looked fairly decent. CRBP was starting to flag out over here and starting to break into new high ground. I took neither of them. The reason why has a lot to do with the risk involved. With CRBP, sure, I could enter on this breakout, but where's my stop going to be? Well, if I put a stop at today's low or yesterday's low, sure, I might be only risking 4.5%. But our job is not to take risk. Our job is to manage risk. If I'm trying to manage risk over here, then where does this trade become invalidated? Below support. Below support is way down here. Maybe you could eke out something over here, right? And keep your stop below yesterday's low. But in order to do that, this is getting a little bit more into the advanced talk. And you know what? We'll cover some more of the advanced stuff in tomorrow's webinar. We're doing a free webinar tomorrow. I will post the link into the chat. Come to this. And we're going to be covering a lot of advanced stuff. We'll cover some of what we talked about on yesterday's live stream, but we're going to be going a lot deeper. We'll be going for about an hour. So if you're interested, click the link that I just shared and join us. But with CRBP, I'd want to see some multi-time frame and confluence. So if I go over to a 30-minute chart to see, okay, this thing is starting to break out. How is it breaking out? Does it have the volume? Does it have strong price action? Well, I come over here and I look at a 30-minute chart, and this action on the breakout doesn't look so strong, right? Here's the breakout. Here's the volume. Volume is low on the breakout. And so far, it's pulled back and now it's consolidating some more. So that's why I give it time. Same thing happened with BURL, right? It too. Here's the breakout. Here's the volume on the breakout. Pretty small. So that's why I sit and I wait. I'm not trying to just put money to work just for the sake of putting money to work. I want to put money to work to win. I want to put money to work to make money. To do that, I need to be patient. I need to wait for the fat pitch. I need to wait for the trades that are most likely to be successful. This isn't it. Jitman over on YouTube. Thoughts on NVIDIA. So I'll give you some more thoughts on NVIDIA. So here's what NVIDIA did earlier. All right. So NVIDIA had pulled back yesterday to the 100 EMA. It's getting this big oversold bounce, right? And we'll see. I'm going to be very curious to see what the volume looks like by the end of the day. If volume is up on the day, meaning it's up higher than what it was yesterday, and if it closes well, that would give me some confidence to say, all right, maybe the bottom is in. But it's also quite possible if volume starts to teeter off, you get something that looks a lot more like AMD, right? AMD pushed higher, and so far, right, a lot of day left. Anything can happen, but so far it got smacked down. Caleb asks, is Nvidia short covering? Maybe here's an idea that I had right after the close on Nvidia, and if I had this idea a half an hour earlier, I'd love to see what it would have been. But I'll share this with you so that way you could start to look for these kinds of ideas if you come across a similar scenario here. So NVIDIA, what do we know about NVIDIA? NVIDIA has been one of the big leaders of the market, and it's liquid, and a lot of people are paying attention to it, and it's starting to break down. And it's below the 50-day moving average. It had a pretty volatile day yesterday. It was down 7%. So what happens when you get a big bar down like this? Anybody know? Anybody know? Well, what do you think happens to the options on this stock? Well, what happens to the options contracts on the stock? Does it, do they get more volatile or less volatile? More volatile. And what does that do to the price of the contracts? Well, if you're looking at puts, then the price of the puts are probably increasing. So in this scenario here, if I saw this about a half an hour before the close, what would have got me interested would be to start to look at selling out of the money puts, right? So I would start to look and see, oh, wow, look at where NVIDIA is. Let's go to a weekly chart, turn off these annotations, make it a little bit clearer, and say, okay, NVIDIA is roughly right here. How much are the $97 puts going for? Right, because I would also be making a bet that we're not going to get a complete implosion on this stock because the market in general is not set up for an epic collapse. So I would look to sell some of those puts, and I would sell the number that I would be comfortable with accepting if they were put on me. I would look at that level. Let's go over to the daily time frame. Yeah, somewhere in the 95 zone. Somewhere in the 95 zone, I would be looking to be an option seller. Right, well, when you start to get big moves like this in some of these high liquid names, especially the ones that have been a leader and not just been a leader, right? Because you could say, well, Disney was a leader. Sure, Disney was a leader how many years ago? Part of the key is what trend is the stock in? Is it in an uptrend? I'm able to spot an uptrend pretty easily. I've been trading for about 25 years. A tool that I like and I've been using quite a bit more is this one right here, Deep View. If we come over to Deep View, one of the things that I've got set up is this panel over here on the right. Gives me a whole bunch of information about the stock. I could have it tell me all different things. But one of the things that I'm looking at is this right here, the Weinstein stages. Now, this is telling me that this is in a stage 3. What's a stage 3 mean? A stage 3 means that we're in a topping pattern. It means that we haven't rolled over yet. That's typically an area for chop, right? Because the the market's still figuring out which way is the stock going to go. Is it going to break out and move back to the upside, or is prices going to roll over? So when you're in stage 3, being an option seller could be fairly profitable. And the reason why is because the market hasn't the momentum is not clearly to the downside yet. So when you get these extended moves like Nvidia had, it could be uh, fairly profitable to take advantage of. All right, let's see. Well, what are the questions that are coming in? Um, Jitman asking about 123 August 9th. I'm thinking maybe a pullback before the Fed, then more upside for tomorrow. I don't fully understand your question here. I don't fully understand the question. Could you rephrase what you mean? Caleb says, I thought about buying NVIDIA yesterday after it came up slightly from 100, but alas, I only thought about it. Otherwise, I'd have made a nice chunk today. So, should was it something that you were thinking about that was part of the trading plan, right? Because well, when I'm talking about the selling puts and those kind of things, those are tools in my toolbox that I have formalized. Do you have it as part of your written playbook? We'll talk about more of that kind of stuff tomorrow during the webinar. But let's talk about the market in general too. So here are some other reasons why uh, we're in this chop fest, and why I'm not eager to get involved and run out and buy something just because it happens to be moving. One of the things is that there's 4 distribution days on the S&P 500. We had 4 coming into today. We had 4 on the NASDAQ. When we have a distribution cluster, it's one of the signs of choppiness. Here's another, perhaps even more important sign of choppiness. Take a look at the stocks. What are the stocks that you are interested in? How are they performing? How are they performing? We'll go back over to Deep View for a second. This feature with the dashboard has been fantastic. Right now, what we're looking at are the stocks that we're setting up for this week. And we're looking at the performance, and we're also looking at a heat map of them. I'm going to add a chart in here. And hopefully this plays nicely. We'll see. Doesn't look like it wants to add the chart right now. That's all right. One of the things that we could still see with this, even without the chart, is that most stocks haven't moved much for the week yet. We're halfway through the week, and most of the stocks are still sitting in that consolidation zone. We've had some big moves to the upside. Commvault had earnings, SFM had earnings, I believe HWM also had earnings. We also had some blowups in here. That's telling us that this is a high reward, high risk environment, right? Because you could hit the lottery. You could blow yourself up, but you're probably getting chopped up, which is this bulk in the middle. And most of the setups have not been what I would consider high quality. There's one stock that I'm currently in. Right, I haven't moved completely to cash yet, but the stock that I'm in that's been doing well is this one right here, BTSG. Got in last week and it's marched up steadily. Earnings is in a couple of days, and I'm probably going to be taking some profits today. Not all, but take some money off the table ahead of earnings. When stocks move up like this ahead of earnings, it it's it's almost like a double-edged sword. It's it's good because you have a profit cushion going into earnings. It's not so good because a positive reaction is starting to get baked in. So for that reason, I like to sell some, not all, but some into strength. And then my stop on this is already at break even, which means that my initial risk on this trade is already off the table. All this is profit. And that's how I like to operate. It's the boring style, right? I could be going for, oh yeah, let's get Nvidia, let's get AMD. Here's some other stocks that were breaking out today, right? Let's try to make something happen here. Let's try to make something happen there. That's not how you make consistency with trading. If you're inconsistent, just going for this, going for that, all over the place, that's you'll have some really good days, you'll have some really bad days, and your stress level will be through the roof. What other questions do we have? By the way, if you haven't already signed up for our free newsletter, we have a free newsletter. It goes out uh, just about every day. We have lots of education in the newsletter. I share my thoughts and ideas in the newsletter. Go over to marrowwealth.com and get the newsletter. I'll post uh, that link into the chat for you as well. There's, oops, that's the link for the webinar. I just posted that again. Here's the link for the newsletter. All right, what other questions do we have? One question that came in from one of our members yesterday, I answered him by email. This question from Carlos, but I'll share the answer with you guys and the question with you guys because I think that it's was a really good question. His question had to do with slippage and order fills, right? So something that he noticed was that he's placing orders, and the orders were he likes to use a buy stop limit order. I like to use buy stop limit orders. The reason why I like to use buy stop limit orders is because you could set up your whole trade and then walk away, then not have to pay attention to it in the middle of the day. It's great, especially for those of us that are working full time. So you set up a buy stop limit order, and the problem that he had was that for liquid names, names like your Nvidias, your Apples of the world, high liquid names, your mega caps, your large caps, he would get very good fills on those. But for the more thin names, the thin names that have been moving lately, like the names in the Russell 2000, like this one here that I was in or still am in, BTSG. This is one of your thinner names. Right? If we pull up this one over on Deep View and take a look at it, like this is only a $2 billion market cap. It's relatively thin. So what do you do with these? Because he was saying that on these thinner names, he would get poor fills. So what do you do? So there's a couple of ways to handle uh, getting filled. Number one would be, all right, I'm just going to trade the large and the mega caps, and I don't want to be bothered with anything else. I'm getting good fills here, and let the smaller caps go. Right there, there's that tactic that you could do, and that would work. Another tactic, and this is what I do because I've seen similar, but I also want to be involved in some of the small cap names. So part of what I'll do is I will set an alert if I see that the action is a little bit funky on these. And so when I set an alert, I could observe the price action and then work to get my orders filled. And if I'm doing it manually in real time, I'm able to get better fills. Another thing they could do is a third thing. The third thing that you could do is take a look at how you're setting up your buy stop limit order. Are you setting it up with a certain percentage in mind? Or is it just a round number, a dollar amount? Generally, for me, I like to set my limit order on a buy stop limit at 1% above the entry. So, for example, if we come back over to uh, this here, if you come back over to BTSG, and it's $12.05, right? $12.05. So, just going to pull up a calculator. So 12.05 plus 1%. What does that get us? 12.17. So if I'm okay with price getting to 12.17, I'll set a buy stop limit order at 12.17. On this day, price opened at 12.02. It got through 12.05. I believe I was filled at 12.07 on this. Let's drop down into a 5-minute chart and see how this played out. Yeah, so right here, or where was it? It was, yeah, right here on that first bar. It triggered there, so 1205. I'm filled at 1207, so I caught the high of that bar, and then price consolidated, and then started to trade sideways for a little bit. So that's how I would go about dealing with some of these thinner names. Setting up a buy stop limit order, but setting a certain percentage that you're willing to pay on the limit side. Any other questions? Any other questions at all? By the way, here's that free webinar that I was talking about earlier. Mastering the Art of Trade Selection. This is happening tomorrow, August 1st at 4 p.m. Eastern Time. I'll post the link into the chat one more time for you. Here's what you're going to gain from this. Clarity on timing. Clarity on timing. Discover when to take trades and when to sit and wait. Boosting your success rates and profitability. How are you going to do that? You're going to do that? Well, you're going to tune in tomorrow and find out how to do that. Expert strategies for growth stocks. Learn the universal process of selecting top trades, including how to find the right setups for your market type and assess the strength of your trade. So we spoke about some of this today, right? Why didn't I go for BURL? Why didn't I buy AMD? Right? Well, we need the right setups for the right market type. We need to know the market type that we're in. All this stuff you'll find out more about tomorrow. Go into a lot of details. This webinar is going to be about an hour long. So make sure that you're tuned in. You'll learn how to transition your trading from a hobby to a business, and a profitable business at that. Any other questions before we call it a wrap? See a question that came in from Jitman. Jitman says, do you think there will be rate cuts today? I don't really concern myself too much with that, to be honest with you, Jitman. The reason why is because I have a process. And the process that I follow does not include whether or not there's going to be a Fed rate cut or not. I look at three main things: general market, stocks, and my personal performance. Those are the three lenses that I look at. And when I look at those three lenses, it gives me this Venn diagram. Right, let me see if I can find it for you. I thought I saved this thing on my desktop. Let me see. Market mood. There it is. All right, let me know if you could see that. Can you see that? Type into the chat, yes, if you can. All right, so here's the breakdown. So when we look at the market through these three lenses, general market, your system, and your personal performance, what that's going to give you, it's going to give you the clearest way to see what you should be doing. Should you be betting heavy? Should you be betting light? Should you be sitting on the sidelines? By taking a look at general market for me, I'm looking at the major indexes like we were looking at before, and I'm looking at them across time frames. And seeing that part is going to help me see, oh, well, what's the weather condition outside, right? To give that kind of analogy. I want to go shopping. What's the weather like? Well, the weather outside is nice and sunny. It's going to be a good drive to get to the market. Okay, great. When I look at the indexes right now, what I see is a chop fest, right? You take a look at these indexes. You have some moving down. You have a couple moving up. And they're all over the place. So no wonder it's going to be a choppy mess. But I don't want to just take a look at them on daily time frames. I'm also looking at them on weekly time frames. I'm also looking at them on monthly time frames. And that's going to tell me something. In fact, it's going to tell me a lot, but I don't want to just look at that either. I also want to take a look at your system. What's your system? Your system are the stocks that you're interested in. So I have this whole universe list of stocks that I'm interested in. And the reason why I look at those rather than saying, well, what's the Fed going to do is because if those stocks are set up in the patterns that I'm looking for, then I know that it's a time to trade, that the shelves are fully stocked. So to go back to the shopping analogy earlier, right? So we check the weather conditions, and now we've driven to the store. We get to the store. What's on the shelves? There's lots of high quality stuff, the kind of stuff that we're interested in, or is it a whole bunch of beat up boxes on the shelves? Right? It looks like a tornado went through it. That's kind of how the market looks like right now, at least to me. So that's what's telling me hold off, right? Be a little bit more cautious here. And then we need to take a look at our personal performance, because if we have these mechanisms to point us towards the what we think are the best opportunities, then the ones that we trade should tell us, oh, is it a good time? Are we doing well or are we not? Right? Well, maybe we thought that this thing that we pulled off the shelf, maybe we thought that it was great, but we got home, we opened up the box and we found that the box was empty. If that's the case, should we continue shopping? Probably want to hold off. Or if we place some trades and they start to do well, right, like this one did for me, maybe I want to be putting on more trades. Right? So right now, this one's doing well for me. So it's saying, oh, I should go put some more money to work. But I went to the store and I found a bunch of beat up boxes on the shelf. So should I just buy them because, that's all they got? Or should I sit and wait? The boring thing to do is to sit and wait. The hard thing to do is to sit and wait. That's why so few people are actually successful at trading, because people don't want to sit and wait. That's why so many people have trading hobbies and not trading businesses, because they don't want to sit and wait. The question we need to ask ourselves is, are we willing to sit and wait? Do we want a trading business or do we want a trading hobby? All right. Good question. Good question, Jitman. All right. We're going to wrap things up here. So I want to say thank you all so much for joining me today. It's been a real pleasure. I encourage you to join us for the webinar tomorrow. Again, it's going to start at 4 p.m. Eastern. I look forward to seeing you there. And until then, take care, everybody. Much love and God bless.